Hi, I'm Veronica. Today we're going to learn the basics of fundamental analysis, the most common used method to evaluate a company's stock potential. Sure, you can buy a stock because your Aunt Maeve told you she loved their line of pork products, but sometimes it's a good idea to get a bit more technical than that. Now don't run away thinking I'm going to have you wearing a pocket protector and mumbling to yourself in a corner over a calculator. It's not like that, really. Fundamental analysis is nothing more than checking in on the general health of a company. It's so straightforward, you'll probably blurt out, "Hey, I already do that." Fundamental analysis grabs the known facts about a company, compares those facts with your outlook and the stock's real price, and suggests a buy or sell. Now everybody has their own magic recipe on fundamental analysis, so we're going to simplify it and use some common metrics used by star investors like Warren Buffett and his mentor, Benjamin Graham. Why not go with the best, right? Let's get to it. Here are 3 fundamental variables you can use to check a company out. The most common is earnings. That's because long-term earnings drive stock prices. So you want to start by looking for consistent historical growth. The longer, the better. Now, any company can get lucky and juice earnings for a couple of quarters. But if you find a gem that is consistently increasing earnings for 5 or 10 years, that's a pretty good sign of solid management. Second, just because a company has done well in the past doesn't mean their future will be as fabulous. So you'll have to estimate future earnings growth. To find estimates, go to Zecco.com and get a stock quote and then click on Earnings Estimates. To judge value, you want to look for companies with relatively low price to earnings growth ratios compared to their competitors. Basically, divide the price-earnings ratio by the projected growth rate of the stock and voila, you got your estimate. Finally, you want to look for a company with a strong return on equity. This is a good measure on how well the management is going to use the cash you're about to give them. Are they going to reinvest it wisely in the company or blow it all on leadership retreats in Bora Bora? A return of equity over 15% is a common benchmark. That's it. Use those 3 principles and you're off to a great start with fundamental analysis. But a little warning, once you get started, you might just get addicted. But don't worry, there are dozens of additional metrics to geek out on like price to book ratios, cash flow, and dividend growth. And you'll probably also want to do some of your own independent research on the stock to ensure you believe the analysts' earnings projections. Let's just say those Wall Street analysts have a checkered past. And that's putting it nicely. For more information, check out Zecco.com and visit our stock screener and investing forums where you'll find discussions on stock screening and more. Thanks for joining me. See you next time.